we'll start with Nisha sharing her perspective on the business and an overview on how we are navigating the current environment.
Thank you, Prateek. Good afternoon, everyone. I hope you and your families are safe and healthy during these very difficult times as possible. And thank you so much for taking the time to be with us on this call today. Let me start with sharing an update on the CEO succession plan, which we announced yesterday, effective October 18, 2021. Sudhir Sitapati will join GCPL as Managing Director and Chief Executive Officer. I will continue to serve our company as Executive Chairperson. Sudhir's significant experience and passion for building sustainable and profitable businesses aligns very strongly with our purpose at GCPL. His value-based leadership style also makes him a great fit with the Godrej culture. I look forward to his partnership in unlocking the amazing potential of our company and leading its next phase of growth. Moving on to the business performance update, let me begin with GCPL's performance for the entire year. Financial year 2021 has been a challenging year for everyone. However, I'm extremely proud of our team members and the remarkable agility and resilience they have demonstrated through these difficult times. During the year, GCPL has grown in double digits at 11% and has delivered an EBITDA growth of 14%. We have been able to drive a resurgence in household insecticides and delivered a full year INR sales growth of 15%. Hygiene, including soaps, continued its strong momentum and delivered a 24% growth for the year. Value for money products have witnessed sequential recovery both in India and Africa, USA and the Middle East, delivering a sales growth of 14% for the year. India also witnessed a double-digit sales growth of 14%, led by strong performance in home insecticides, which grew at 16%, and hygiene, including soaps, which grew at 15%. Performance in our Indonesian business was soft with a constant currency sales growth of 2%. This was backed by steady performance in household insecticides and significant scale-up of our hygiene portfolio under the Saniter brand. Our Africa, USA and Middle East business saw recovery and delivered constant currency sales growth of 9%. Specifically in Q4, GCPL delivered a third consecutive quarter of double-digit sales growth. Our growth was broad-based. Overall sales grew by 27%, EBITDA grew by 21%, and PAT grew by 20%, excluding exceptional items. Hygiene continued its strong growth momentum, growing by 38%, and we look forward to strongly building on this category in the years ahead. Value for money products grew by 27%. Growth in household insecticides was at 28%. We also saw continued strong growth momentum in the household insecticides and hygiene categories and sequential recovery in value for money products. From a geography perspective, India recorded a sales growth of 35%, led by growth across the portfolio in hygiene and household insecticides. Overall, rural grew at 1.4x of urban. The scale-up of the e-commerce channel continues. Indonesia witnessed gradual recovery with a 4% constant currency sales growth on a base quarter growth of mid-single digits. We had steady performance in household insecticides and a meaningful scale-up of hygiene. We continue to see gradual recovery in air fresheners and are strategically addressing high competitive intensity in wet wipes. Our Africa, USA, and Middle East businesses delivered profitable sales growth of 36% in constant currency terms. I continue pleased with the strategic focus and growth mindset of the team. Our consolidated EBITDA margins at 20% decreased by 110 basis points year over year due to a drop in the India and Latin America and SAARC margins. In India, margins decreased by 500 basis points year on year, driven by the lag between an increase in input costs and end consumer price increases, provision of slow-moving inventory on a conservative basis, and a one-time variable manpower remuneration reversal in Q4 of financial year 2020. We continue to have a healthy balance sheet. The return ratios continue to move up, and the net debt to equity ratio came down. We are carefully navigating the challenges of the second wave of COVID-19 in India by ensuring seamless supply chain deliveries and closely tracking shifts in consumer behavior to respond to. We are leveraging our learnings from the first wave and are better prepared to respond to any supply chain disruptions given our ramped-up production capabilities. While localized lockdowns could impact frontline servicing and the replenishment of outlets in the very short term, the second wave is likely to be a tailwind for the hygiene category. Our teams too remain resilient and agile. As always, our values matter the most at this time. We are committed to enabling the safety and well-being of all Godrejites and serving our consumers and communities with our full hearts and minds. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. My first question is on hygiene segment in India. You launched multiple products in wave 1 and you also said wave 2 also tailwinds will be there. Could you tell us which are the products where you are getting more confidence and which are the lagging products where you may take a call? And second, we have also seen a lot of consolidation. A lot of the new players who entered are exiting or already exited. So do you see them coming back? And you yourself are new in a lot of these segments. So is there a long-term opportunity or is it more of a wave 2 or wave 3 opportunity?
Hi, Abneesh. Thank you for your question. I think I've mentioned before also, what we're seeing is definitely consumers need to stay protected and clean and, protect from viruses or other things has become much stronger. We've seen penetration also grow in household insecticides. What we've done in hygiene over the year and as we go ahead is really double down in products where we feel we have very strategic advantages, whether it's soap, Magic hand wash, and some of the other categories we played in. Last year, we had played a few parts of the business, like we launched masks and a few other products that we're actually not even, relaunching in wave 2 or focusing in wave 2. So I think we have a lot of learnings also from, the last year on which of these products in hygiene that we should focus on.
And in terms of soaps segment, market leader in India said 2 rounds of price hike have happened, around 6 to 7%. In your case, last 1 year, how much is the price hike? And are you also planning one more hike? And any views on palm oil for the year?
Hey Abneesh, this is Samir here. So I think we have taken 6 to 7% of price increase in soaps, as you can see in Q4 itself. I think sequentially our price increase would be to the tune of 3 to 4%. The approach which we have taken is more of a calibrated price increase and which has worked very well for us because we have seen strong growth as well as strong market share gains. And that's the approach we will continue also, at least in medium term. This also will be a good opportunity for us to gain market share from a lot of small players because they normally sit on the fence in high inflationary environment. And we'll try to mitigate some of this kind of gaps through structured costing programs as well as evaluating pricing opportunities in rest of the portfolio in very short term. The vegetable oil prices are more or less at similar levels. over next couple of months, we expect, those levels to sort of continue. It would be one of the longest, sort of bull run for vegetable oil prices, I should say, over last, kind of 12 to 15 months now. So let's see over next, 3-4 months, eventually which direction it kind of, takes.
Sure, that's very helpful. My last quick question on Africa, any business or any region you have evaluated where it doesn't make sense from a core synergy, core focus perspective long term? Anything you can share at this stage?
Nothing, Abneesh. If you look at our play, it's, sort of in some of the large markets and the so-called, kind of tier 2, markets. So I think geographically and even category-wise, the portfolio looks, pretty complete. At this point in time, the entire thinking is in terms of getting those, growth building blocks, whether it be marketing campaigns, whether it be seeding in new future, growth categories, as well as, kind of driving GTM initiatives in most of the markets we are present in.
Sure, thanks. That's very helpful. All the best.
Thanks, Abneesh.
Thank you. The next question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good afternoon, everyone. Am I audible?
Yes, we can hear you.
Okay, great. Couple of questions on this, new appointment. So, Nisaba, what are the areas that you think should be the priority for the new CEO after he takes over, across, let's say, India, Indonesia, and Africa? Are there any thoughts on that you can share at this stage?
Sure. I think the main focus, if you have to say what are the top 3 focuses, it's probably growth, and then I think there are underlying pieces of how do you get to the growth. But I think what we've seen this year, and last year I talked a little bit about getting to double-digit growth, the resurgence in household insecticides. So I think we've made a good start to it. My expectation is that he comes in and now sort of takes this to the next level. I think we all know his background in sort of category management. He turned the soap portfolio around at HUL at one point. So really bringing that, more category management thinking across the GCPL clusters and strengthening that piece is what we'd really look forward to.
Got it. And second, on your role, you have been the MD for last few quarters, and before that, in the earlier regime as well, you played an important role on the product launches and the new initiatives. How do you think about how your role will evolve after Sudhir takes charge as the CEO?
I think we'll have to wait to see how he, once he comes in. But I'll continue to play the chairperson role and, support him. Obviously, ultimate responsibility for governance, asking the hard questions will still fall on me. But, I'm hoping that I can continue to support him on all the knowledge I have of the company and give him that support, but really let him have a very free hand in coming in and seeing what can be done differently. I'm also looking forward, my history with GCPL also goes back many years, so over a decade. And I really felt at that, that time when I first came into GCPL, it was a wonderful opportunity to actually look at it with very outside in eyes, and at the same time, my father was the chairperson at that time. I had a lot of backing from him to go ahead and sort of make bold changes. So I hope I can play that role that for Sudhir, where he can really come in, put a transformation agenda together, and then I can really help enable it.
Got it. And one last thing on, since you mentioned about, the transformation. So does that mean that, in case if the thought process is to expand and get into newer categories, so let's say you have had 3x3 strategy a while back, and then, you obviously extended beyond that, be it, the fresheners or the or hygiene products?
Not launching a food business, so that was not the point of getting him along. No, I think, look, I think some of these things in any case, we've transitioned a little bit away, from three. There has been some transition already, and I think with him coming out, he'll probably put start communicating a new strategic plan. But I still think it will be really sort of doubling down on growth in some of our core categories, right? Household insecticide, hair care, this hygiene and air care and fabric care, all quite new categories with low penetration across some of their pieces. So I think he can really come and help ignite on those categories. So I don't think, but obviously we potentially might get into new categories. There might be acquisitions that come up, but I think it's really what we're looking for is good, strong, double-digit organic growth.
Very good to know, Nisaba, and good to know that you don't want to get into food, so that focus is great. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, Nisa and team. Good afternoon. My first question again is on the management change. So when Vivek left, I think as a firm we took a decision that we would not hire anyone else in his place, and you would be stepping into his shoes. Now, within such a short duration after his departure, what really was the thought process behind the change in that sort of decision that we had taken at that point of time?
So Percy, I think when we had taken the decision at that time, it was during the pandemic, and I did feel that it was not the right moment to bring in someone from outside at that point, and that I would run the company myself. We also obviously in these sort of situations do have some very good internal candidates who could have also done the role. We eventually decided to go with Sudhir, and I think the idea was that I would run it for a couple of years, and in April 22, when anyway we're going to split, you had to legally also split the chairperson and CEO role. We would have a successor appointed by then. Sometimes if seemingly good things are happening to you beforehand, you might as well go ahead and do them. So I think that's been the thinking behind this.
Right. And on a slightly related note, if I look at the three senior positions in your company right now, that is the MD and CEO, which you recently filled, as well as the head of Indonesia and the head of Africa, they are all outside hirees. So just wanted to understand, I mean, did you ever consider, or do you think there's a concern in terms of what message that sends out internally, and whether that is sort of a point that you could address in some way? Because we've been ranked as one of the best places to work, etc. So we do have a very strong internal bench. And in that context, three senior positions going to outside guys, how do you sort of look at that holistically?
Sure, I'm happy to answer that. So I think, Percy, if you look at those positions before we got the outside leadership, they were actually filled by internal positions, and we've actually taken a lot of bets on very good young people internally. I think Indonesia wasn't recent, it was 4 years ago. And obviously the Africa piece was 1 year ago. I think what then happened is that we've become global as a company quite recently. So the thinking was then to get leadership, because we had sent people from India to run these geographies, and people who had a lot of experience in India. And then at some point we felt when these businesses were not performing to the mark, and we'd obviously, as you all know, have put in a lot of money into these businesses, that we wanted sort of very experienced people from those geographies to come and run those businesses. I think so far those calls have been right, and I think as long as people internally feel that that we make the right decisions, that we equally give people internally a chance. But for these senior roles, we do tend to also benchmark from outside.
Thank you. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi. Thanks for taking my question. My first question was on HI. So I think last quarter you had specifically mentioned that you're seeing some return of the infant stick into the market, and that was pressurizing market share again. Any update on how infant stick shares are now doing? I remember pre-pandemic these used to have a low double-digit share in the industry. How has that kind of now settled down at? And a related question is, a lot of your innovation in HI still seems very focused on premiumization like Gold Flash or new segments like the Roach Bomb. Any thoughts on the penetration gain? Do you need a lot more there in terms of your efforts to drive penetration at the low income segments?
Sure, let me answer that for you, Arnab. So I think incense sticks stay at the same level that they were basically during the year. I think what we saw in Q1 last year, that the supply chain shock was so big that they went out. We continue to, work very strongly on the sort of legal government side. We've actually had a very senior person join us in corporate affairs in the group too, and one of his key mandates is to help on this issue. So as you know, about 80% of our portfolio is in the premium segment, or say 20% of our portfolio is what we call non-mosquito, where growth has been very high, penetration is very low. So even say something like LV or LMD, penetration went up in the category this year, but it's still at about, I think, 26-27%. So the headroom in these and the margin profile in these segments obviously gives us a reason for sort of cheer. That being said, obviously, the burning formats is not something that, we still continue to be the market leaders in coils by far. I think this year, I'd mentioned it, I think, in a previous call, we do have 2 products coming against these illegal sticks that sort of compete directly against them. Our natural incense, and we were obviously waiting that registration cycle, which will happen this year. We had launched those natural sticks, but they didn't, from an efficacy drop-dead perspective, were not able to sort of effectively for consumers compete as these illegal incense sticks. But I think you'll see more from GCPL this year on the burning format front.
Thanks, that's very helpful. And my second last question was on these 2 brands, Pro Clean and Protect, which obviously FY21 was a big year of ramp up in terms of products as well as new segments. So at a full year level, is there anything you can share with us which can help us appreciate what you're doing in here in terms of either exit market shares that you have or distribution or absolute sales, which can help us just understand where you are in this path and how the first year has gone, and how we should think of the next 2-3 years in these 2 specific brands which you are scaling up.
Yeah, hi, Arnab, this is Sameer here. Well, we will, kind of refrain from, sharing. Yeah, sorry, Lisa just, kind of got logged out of the call. She's just joining in. No, what I was sharing is, we would refrain from giving very specific, kind of inputs, but what I can share with you is one strategically, this play of, hygiene and extended hygiene within cleansing format is extremely, kind of critical for us. If you look at a hygiene portfolio other than India itself, I mean, last year in terms of saliency was close to around, 4%. Also, the cleansing format was off to a great start, and we did say that we in which ways had the same, sort of planned for in terms of our, kind of launches, but we sort of preponed also during, the first wave of, kind of lockdown, right? And of course, we will also back it up with more interesting innovations over a period of time to make this play very, very, kind of strategic and hopefully, big for us. So that's the thinking which we have. And again, these are the categories which are relatively under-penetrated categories where we do feel that we have right to win if we get the right product innovation and in parallel also leverage our distribution.
So 4% includes ProClean and the sanitizers. I'm just trying to understand what all is counted in that hygiene segment.
Yes, it does include. I think, yes, it does include, I mean, both ProClean as well as the entire basket of hand wash and sanitizers on that.
Okay. Thanks. That's it from my side. All the best.
Thanks, Arnav.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
I just wasn't clear on the last question on the burnings category. So is this pickup in HI or is the strength in HI largely on the back of categories kind of remaining strong, or is it because of market share changes or the incense stick segment market share changes, especially in the burning side?
Yeah, hi, Avi.
We've done well across all the categories. So we've had good growth even in the burning formats. Like I said, we still are the biggest player in coils, which is still the biggest segment in burning formats. So actually across all segments, non-mosquito, electrics, everything showed good growth this quarter, and actually even across, if we look at it as a full year basis.
So I just, let me be a little more pointed on this. What I was trying to understand is, has there been any change in the competitive intensity from the incense stick manufacturers, illegal incense sticks, or no? Is it?
No.
Okay. And the second bit was on your comment on the second wave, the expectation. Are you seeing that change on the ground on the hygiene and on the non-discretionary, on the discretionary portfolio? Any changes as yet?
Not so strongly. I mean, April was strong. It was a sort of continuation of Q4. But the expectation is that you will have a little bit of a cake off with some of these categories which have that health, the hygiene, household insecticides, having some amount of tailwind, and perhaps the discretionary having some amount of headwind. I mean, given what the situation of the country is and what people are going through, it's pretty hard, correct? I don't know. And I mean, we normally don't say it, but I don't expect people to be very bothered right now about coloring their hair and things like that. We haven't seen it yet, but potentially in the first half. The other thing we've seen also is that, these, like the last wave, the wave hits, but, then people eventually just go back to some of their normal behavior. What we have seen in some of these categories is perhaps a penetration shift or a habit shift that would stay, which would last longer. So, I've given the example of, say, a hand wash before. Penetration might not stay at the highest absolute level because penetration went from 12% to 35%, but it's definitely now coming down to 12% again. So I think we'll see some of these trends play out.
Okay, perfect. And last, just a clarification on the leadership change. If I hear you correctly in the start here, the thought is that, the focus would be to drive double-digit growth, and the portfolio changes or any changes would be something that would be on the table. with Sudhir's kind of expertise?
No, I think what I said is that I don't see too many portfolio changes happening. That's not the mandate that he's coming in with. But obviously, not just because he's a new CEO, but he will take a re-look at the portfolio, perhaps say, here's where we want to invest more, double down. Perhaps this is not an area we want to focus on. So I think I was just trying to clarify that I would say most of the double-digit growth would come from our core categories, and some of these new categories like, air care or even this liquid wash, where there's a lot of opportunity because penetration is still, still low.
Okay, so existing categories, but okay, that would be first. Perfect. That's very great. Thanks a lot again, and congratulations.
Thank you.
All the best.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, sorry, Nisa. I'd put myself on mute last time around, so you guys couldn't hear me. A couple of questions on the performance. So I'll put them up front. Indonesia, what really would it take for us to go back to double-digit kind of growth there? And secondly, in Africa, I know that apart from the top line growth, you're concentrating on margins there also. So could you give some guidance on what kind of margins you would like to achieve over the next couple of years kind of time frame, and also in the longer run, what's the stable state margin for the geography that you're foreseeing?
Sure.
And I'm asking this question in the slightly shorter term context where sequentially we've seen a dip in the EBITDA margins in Africa between Q3 and Q4.
So I'll answer the Indonesia question first, and then I'll also ask Sameer to jump in on the Africa EBITDA because he's someone who's worked on that quite closely. I think in Indonesia, if I see it, there has been, the growth has been disappointing this year. I think FMCG as a whole in Indonesia has not done particularly well this year, but let's put that aside. I think where we've done exceptionally well this year is building this, sort of 100 crore plus hygiene portfolio in 1 year. And it's been quite strategic. The products have been quite strategic in areas where we have competitive advantage. So I really feel that this is a nice new growth lever for the Indonesia business. HI was, relatively good, but again, can be pushed. And in HI, we have a new sort of what we call long-lasting paper burning format launch, along with this big GT push. And, we're also doing magic hand wash and bar soap there. So I think some interesting growth levers. I think this wet wipes, we totally dropped the ball on this year. Given what happened with the competitive intensity. So we must, really recover that business. And even in air care, sort of double down in sort of the growth pivots, which we had planned even before COVID. So I think if, the recovery happens in some of these categories and we double down in growth in some of the others, we should see a good recovery.
Okay.
Great. See, I think your question on Africa margins, we had shared that, over the next few years, we would want it to be, sort of mid-teens to high teens. I mean, those levels is what we would, kind of plan for. Of course, it's going to be a journey, and this will perhaps, shape up over next, kind of 3 to 4 years. If you look at current year, I think we'll end the year with close to around 10% margins, but we need to also dissect current year into two halves. First is Q1, which was a washout because of COVID, and then Q2 to Q4, which was actually very strong. I mean, in terms of growth rates to begin with 20% plus, and even in terms of margins close to around 11.5% up by, I think, 150 basis points. So that's the plan. I think it will be driven by scale. It will be driven by cost saving programs. It will be driven by favorable category or format mix. These are going to be the larger drivers to that. In terms of sequential margins, what we have to understand is there is a big seasonality in Africa business, especially in Q3, which is the festive period, and hence in Q3 there is significant scale leverage, as a result of which margins historically and also going ahead will be higher compared to any other quarter. Q4 tends to be seasonally weakest quarter, and hence there is relative to Q3 a scale deleverage, and hence the overall margins will be lower in Q4 compared to Q3. If you look at net margin, and that's the other matrix which we track internally sequentially, in fact in Q4 the net margin, which is gross margins reduced by the trade and marketing investments, were higher, I think by around 100 basis points compared to Q3. But the entire relative drop is completely driven by scale, which in turn is completely driven by the seasonal kind of quotient attached to the categories over there.
Understood. Yeah, and this mid to high teens versus your current levels of around 11% or whatever that is. So that's about a 600 basis points kind of expansion over 3 to 4 years. Do you think that's going to be back-ended, or should we expect linear 200 basis points or 150 basis points every year?
Yeah, I think no, it definitely it's not going to be back-ended, right? Because you need to kind of demonstrate that right from the word go, and I think we will see it quite evenly spread it out. And internally, the way we are thinking of it is honestly keeping it more front-ended than leaving it too late in the day. But definitely, it's not going to be back-ended. If any, I mean, it will be more evenly spread it out across the years.
Right. Thanks a lot, Samir and Nisa. Thanks for the second opportunity.
Thanks.
Thank you. Stay safe.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good afternoon. Just had two questions. The first thing, you've mentioned in your presentation that the innovation rate is in high teens for this year. So could you just explain that and probably give a sense of either on a global level or on an India level, innovation rate as a percentage of business, how that's kind of tracked?
Yeah, I think the rate is very high. This is the 18% number that's on India. And it's very high, specifically driven by this Gold Flash new machine that we have. I mean, that is our biggest product category. And I think we mentioned before what we did is that we actually replaced, because we believe in this product so much and think it's so good, removed all the other machines we were selling and has kept this as the sole machine in the market.
Okay. And as a proportion of business, you're saying that how much would the innovation rate be in terms of the last 1 or 2 years? Would that be low single digits, mid single digits?
Yeah, it would be like mid-single digits. Depends on year to year, right? And we calculated an innovation is an innovation for 3 years. So it would depend year to year.
Okay. The second question was on the India margins. This year has been a bit challenging in the second half also because you've seen a sharp inflation in vegetable oils. If you could just give a sense of, what are the other categories facing in terms of inflation in India, and how do you look at, the medium-term margins, especially since you're talking about a calibrated approach. So specifically, 22 versus 21, are there enough levers for you to kind of hold the margin at these levels, or just wanted your sense on how you're looking at it?
Hey, Harit, this is Samir here. No, so I think the drop in gross margins, especially if you look at Q4, was because of one, increase in vegetable oil prices and a lag between increase in input price and then consumer price. And I was voicing earlier that strategy has worked very well for us in soaps, reflected in strong growth as well as market share gains. So we'll continue with that strategy. We have seen relative increase in crude prices also. It's an indirect derivative, but we'll be able to mitigate, the increase in crude prices. We are also evaluating opportunities on pricing in rest of the portfolio beyond soaps. So let's see how that, shapes up. In the interim, we'll be also judicious and smart in terms of our spendings, right? Whether it be, trade promotion, sales promotion, or even marketing investments, to see, how this overall, kind of margin profile, shapes up. And last but not the least, let's see, how the overall commodity inflation, especially in vegetable oil itself is, kind of going to shape up. At least over the next couple of months, we do feel that prices should remain at this elevated level, but this has been, a good long time of last, kind of 12 to 15 months, which is at least unusual compared to some of the previous cycles where, these prices have been at such an elevated level for so long. So let's see how that, eventually, kind of moves ahead. Our sense is, at this point in time, of course, too many variables and moving parts, we should be able to, sort of maintain our margins in India on a full year basis.
Okay. Yeah, thanks. That's all mine. Thank you.
Thanks, Harit.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have two questions. The first is on the other, businesses in the India portfolio, which accounts for roughly 15%, and I believe this will include Protect, Proclean, and Air and Easy. Could you give us a sense on the distribution footprint for these brands today, and how do you see that scaling up? And the second question was on Indonesia margins, which have seen a healthy improvement despite whatever is happening on the top line. So do you anticipate or see scope for further improvement here on these margins, or would you choose to reinvest some of these gains back into, driving the top line growth momentum? Thank you.
Hey, Latika, this is Samir here. So I think if you look at the entire basket of other categories, as you rightly pointed out, it's actually a mix of air fresheners and liquid deaths and the new age, hygiene, formats. These are categories which are relatively under-penetrated and hence significant opportunity in terms of distribution. But it's not just distribution, it's also going to be, kind of product innovation, which will, kind of get new consumers recruited into this category. Today we are at overall GCPL level, widely distributed, 6 million outlets, 1.3, 1.4 million outlets, is the direct reach. So I think distribution is quite good. We can very easily, sort of have, kind of cross-sell of, categories and brands within our portfolio. So it's going to be a combination of both. To answer your point, in terms of driving, strong, sustainable, kind of growth in some of these, emerging baskets of categories going ahead. In terms of Indonesia's margins, I think to begin with, 35% is what was the margin in Q4. My sense is for FY21, our margins could be hovering around 27-28% mark. Still, we feel there is opportunity in terms of expanding margins. If you track some of the listed, FMCG companies, the margins could hover around 30%. So I think a combination of driving sustainable sales growth and continuing, good work on cost saving programs, getting favorable category mix will be the drivers in terms of scaling up Indonesia margins in, kind of years to come.
Sure. Thanks, Samir. Any sense on what would be the reach of Protect brand today in terms of number of outlets?
Sorry, Latika. We would want to keep it a little inward at this point in time. We'll be very happy to share more details on some of these emerging baskets going ahead.
Sure. All right. Thank you.
Thanks, Latika.
Thank you. The next question is from the line of Godrej from Centrum Capital. Please go ahead.
Yeah, hi, good afternoon, team, and thanks for the opportunity. Mr. Hearty congratulations. At least the market has cheered the stock price performance today. I have a couple of questions. In my mind, I was thinking, though we have said you have taken about 7% price increase on soap, would you be able to share what is the weighted inflation we are seeing in HI in terms of cost inflation and also in soaps, and how much we have affected the price change?
Hey, this is Samir here. So I think in soaps, if you just look at vegetable oil prices and look at the replacement rate, I think it's up by anywhere between 40 to 50%. We have taken price increase of around 7 to 8% on sale price. Right. Theoretically, if we had to mitigate with our coverages at this point in time, the entire, impact, it would still call for 10 to 15%, price change. In household insecticides, at this point in time, as I was calling out earlier, we are not too worried about inflation. Yes, there could be a crude impact over there, but I think it will get more than mitigated through, driving favorable format mix as well as taking selective price increases in, some of the formats within the category.
Okay. Just a related question on the follow-up. These two categories, it would be helpful if you can give the annual number in terms of market share.
Well, we will say directionally that, we are the second largest, soap, manufacturer in the country with, kind of, low teens, kind of market share. And in household insecticide category, we are nearly half of the market in terms of our market share position.
Okay, Samir. My next question, last question on the Indonesia business again. I think we have seen you have taken a lot of activations in terms of distribution, and you have also taken some product intervention, like you have taken Saniter soap last quarter. My broader question is that again, where do we see Indonesia 3 years from now? I mean, there are a lot of expectation, hopes, which we have built, and there is some things which are changing. But is there any confident answer if you can provide that? Is it a product problem, or is it a distribution problem, or it's a overall economy problem?
I don't think. Firstly, I think Indonesia, we've been in the business for 10 years, so I think it's been a very successful acquisition. The categories are, very highly overlapped with what we do, and we have very strong relative market positions there and a lot of growth opportunity, whether it's through GT or like this new Saniter brand. I think as an economy, Indonesia, ever since we've been invested, it has also done quite well. I would say in the past year there has been a macro impact. If you look at all the peer sort of results that we get, they haven't been enthralling. That being said, we've been quite open, say on wipes. It's not been a great show. In something like hair care, we've gained share, but we are again, over 50% of the category, so we need to be actually driving category growth. Although in hair care, we've seen all over discretionary categories during COVID have been affected. So I'm very positive about Indonesia business. And again, if you look at the strategic position of the business, it's a scale business, high margins, good relative market share, strong brand. So I think we have, we can be confident about this business going forward.
See, I completely agree with your thoughts on that business. I mean, my only worry is that 10 years we have seen at least many cycles of growth and downs. And I think that's one of the important piece when I go back 10 years before when we acquired Megaseries. And I think it keeps on worrying that some or the other we have some disappointment there. So is it that you guys are continue focusing on that business, or we will divest at some point of time?
No, we'll definitely not divest the Indonesia business. And I think let's be practical about business. I mean, you guys come here and ask us every quarter about what's happening, but there are business cycles, correct? Even the best companies sort of don't grow. I know how much you all hold HUL and Unilever sort of as the gold mark, but if you look at Unilever's results in Indonesia, they haven't been particularly strong this year. So and I'm not trying to, and please don't get me wrong, I'm not trying to be defensive about our business, and I do think that perhaps there were things that we could have done better internally, but certainly there's no question of divesting that business, and certainly in our eyes that's been a very successful, value accretive and wonderful acquisitions by any sort of measurement.
Rishabh, don't take me wrong. I'm not trying to push you to sell the business. I'm only saying that do we have a complete handle on that business?
Don't worry. I don't think you can push me to sell the business. And I'm not. I'm just a market. I think. And please feel free to ask your questions, and all your questions actually make us much stronger as a company. I was just commenting on the fact that I actually think Indonesia is a strong business. And, over the 3-year period that you spoke of, that I actually think it will do well, and no, we're not thinking of divesting it.
Sure. Thank you, Nisaba, and thank you, and all the best to you.
Thank you.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi team, just one question only from my side on India insecticides business, or rather I would say the mosquito repellent business. Given that we are at somewhere in that 50s market share, also given the context of the competitive landscape, which has been around for the last 2 to 3 years, just curious to understand, whether as a company we have pushed the market share, driver opportunity as much as you would have liked to do. In the context of the thought process that, is it just that the targeted margin approach, or is there any other constraints? Because otherwise, given the competitive landscape, a logical assumption from outside would be that you should be at, a far higher share than where you're.
Manoj, I'm not sure I fully understood your question. And, our shares differ if you break up household insecticides, correct? So if you look at things like electrics or aerosols, obviously our shares would be much, much higher there than it is in the burning formats. But, as the market leader, I think we have to play all segments of the market. I think the opportunity, as we've seen, is that in the more premium, like say something like aerosols, penetration is less than 5%. Or non-mosquito penetration is about 8 or 9%, correct? And so I think the opportunity is to play all formats and probably have a blended approach to growth, correct? Like I don't expect our burning format, even with these new innovations, maybe if the new innovations are wrong, biggest hit ever, then that will change. But we'll see that, burning format should grow in sort of mid-single digits. And then you drive all the double-digit growth through the, other parts of the portfolio. I hope that answers your question.
Understood. No, I'll tell you this, where I was coming from. Maybe I was probably wrong in, phrasing my question actually appropriately. So what I was looking at was, when I look at HI as an overall category, I was just looking at it and saying that in the next, let's say, 2 to 3 years, or even in the medium term, is there a market share gain better as, an added tailwind for you to grow? Given the context that, you are being the only player, I mean, that's extreme, honestly, statement to make. Rather, let me put it this way. So you have been probably the player who has always been the most innovative in the HI category, particularly in the mosquito repellent. So to that extent, your shares appears to be a little under-indexed versus where it should be, given the, let's say, awareness higher than availability, or, mind share higher than where it should be.
Yeah, no, I think our shares are quite high, Manoj, actually, and in some of the formats, they're very, very high, correct? So, but I do think there's an opportunity for share gain. Now, if you look at, say, this Gold Flash in terms of product innovation and stuff, should be, we should be in the sort of medium to long term gaining share in that product category. I think where our share is, still very high, very, very high double digits is burning format. So obviously, if you have a hit product coming against incense sticks, that could work really well. We're also re-looking at some of our coil strategy. So there's products coming in there. So you could potentially see market share growth. But Manoj, my bigger focus on, with a 50% market share would be really driving penetration, correct? I'm not, because you want more people protecting themselves from insects. And I think that is really the opportunity if you get it right. Like I mentioned, LV is at 25%. Sort of penetration. How do you drive that up? Maybe when I talked about the growth goals, I'll put that on Sudhir's thing. It's a very profitable category. It's one of our biggest. Say, how do you drive that? 25 to 50% penetration.
Just one follow-up, and that's the last question. On the Magic Gel launch a couple of years back, which is essentially the thesis was to take advantage of the, increased electrification in villages. Just the top-down thought process as well as the learnings from that, which I think we have discussed in the past. I think we can skip. How do I think about
You're talking about the Magic was the Magic hand wash.
No, I was talking about the Magic Gel, essentially the cheaper electric format to take advantage of the electrification.
The power chip.
The power gel, yeah.
That launch actually failed, Manoj, because people were peeling the power chip off. We corrected it, but then since we had Gold Flash that came about, say, 18 months ago, we only wanted to focus on this piece one at a time. But that's something that you might see us bring back, or again look at pricing in the electrics category to drive penetration.
Okay, got it. Okay, got it. Thanks, guys, and all the very best. Stay safe.
Thanks so much, Manoj. Stay safe, and hope to see you soon.
Thank you. The next question is from the line of Binoy from Sunidhi Securities. Please go ahead.
Yeah, thank you for the opportunity. This question is on the LATAM business. Now, this business has been challenging for us since the past 2 to 3 years. We've tried to correct it, and then there are certain macro factors which pulls it down. I understand that there are cross-pollination opportunities which this business has brought for us, but nonetheless, in our overall consolidated sales mix, it remains very, very small. So, is there any thought to do away with this business?
Thanks for your question. And actually, over the last 2 years, this business has performed very well. So, if you look at the rates, both top line, we had a 17% in INR for this business, and EBITDA was like 200-something% growth. So I would disagree that it's not done well in the last couple of years. If I look at the last sort of 5 years, I wouldn't say that it's done particularly well. I'd rather not comment on any sort of acquisitions and divestments on a call like this. So thank you for your question.
Sure. And second quick question is on the debt repayment. Will that continue in FY22 as well?
Yeah, hi Binoy, this is Samir here. Yeah, that's the plan. We did see significant reduction in debt and the net debt equity ratio coming down to 0.07. I think in very short term, the thinking is to sort of continue with that strategy of repayment of debt, whatever is sort of left on the books at this point in time.
So is there a target as to where we want to reach in terms of the gross debt level? Because right now, in terms of the ratio, we are in a very comfortable place. Plus, we are almost net debt free. So.
Correct. Yes, as I said, we would want to, of course, for free cash flows, we will have multiple, avenues. One is to sort of, kind of deploy it for growing organically through CapEx or even inorganically. The other would be, kind of rewarding your shareholders, and third would be, repayment of your, kind of debt and gross debt to sort of begin with. But that's the plan. Ceteris paribus, the debt, I think, will keep on, sort of coming down.
Sure. Thank you.
Thanks, Vinay.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah, thanks for taking my question. Most of the questions are answered. Just, one thing in the second wave, if you could comment on the rural markets in India, what kind of, challenges are we seeing? Because, this time COVID seems to be far more penetrated in rural as compared to the last wave. And what is the demand outlook for rural?
I don't think, I commented earlier, I think that April has sort of been a continuation of Q4. So we'll have to just wait and watch and see what happens. The situation is so dynamic on the ground and so different state by state. So it's very, very, very hard at this stage to comment on rural. So maybe you have something to add?
Yeah, absolutely. And I think Prakash, the other point is, while yes, the kind of number of infections and cases have been relatively higher this time around in rural and small towns. But we also are expecting a good monsoon, and again, this bit reverse migration should perhaps, offset any, kind of negative impact coming out of it. So as Nisa said, it's too dynamic and choppy, but in a way you see tailwinds as well as headwinds, right? In terms of, driving, steady state growth. Our view is, let's see how at least next few weeks and months, kind of shape up. But directionally, I think the recovery which we have seen in rural whole of last year should, also continue going ahead.
Yeah. Thanks.
Thanks, Prakash.
Thank you. The next question is from the line of Kiran Nayak from Modi FinCap. Please go ahead.
Thank you for giving me an opportunity. I have two questions. First is, do the company have some SKUs in small packets like to be sold in rural and urban areas? And any new products will be launched in the financial year 21-22? Thank you.
Thanks for your question. So we do have a very strong product pipeline, and we will continue to see a lot of new launches coming in from our end. We were talking earlier of the innovation rate, which is a good metric to track, kind of new product launches, and that will, continue to be very robust. Going ahead, yes, we do have, kind of very smart, pack price mix architecture strategy, and you also see a lot of, sachet, kind of offerings from our end, whether it be, in hair color portfolio or whether it be even in the hand wash portfolio, the powder to liquid, hand wash sachet, which is available at 15 rupees. So that helps us driving penetration in general and also gets us, kind of consumer base in small towns and rural markets. So that strategy also will continue to be a strong growth, vector for us in coming times.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Nilay Shah from Moon Capital. Please go ahead.
Thanks. Just one question for me on dividends. Just curious to understand what is the thought process of not giving out a dividend this year. And the context of this question is, there were some talks, last year that going forward, the international business debt would probably be paid down from the international business cash flows. So given the strong positioning of the company in terms of cash and the reasonable performance this year, what was the reason for not giving out a dividend?
Yeah, I think this is Samir here. I think the intent was to kind of, at least in the uncertain times as we were, at the start of the year, to see a mix of, deployment towards repayment of debt, as well as sort of funding, organic growth through CapEx, and then also evaluating in parallel any inorganic growth opportunity, and alongside, kind of reward, shareholders. I think the strategy which we chose was during the course of the year to sort of use the cash for repayment of, dividends. A lot of cash also from our international business is getting upstream. So that in a way, sort of is getting used as we speak for repayment of, debt, which was largely taken to, kind of fund those international, sort of businesses. And we'll continue with that approach, and we'll continue with that mix in terms of, ensuring that the debt goes down. If there is any, kind of interesting inorganic growth opportunity, it could get deployed towards that, as well as in parallel ensuring that our shareholders continue to, get rewarded. It's going to be a cocktail of all of the three, in terms of deployment of free cash flows.
Okay, thanks, Samir. Thanks so much.
Thanks, Nilay.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, two quick follow-ups. So one is on chemist channel and e-commerce. How do you benchmark yourself against the market leader? Both are very important in the current context. So how do you shape up versus the market leader?
Hey Abneesh, so both of these channels are kind of growth channels for us. I think Chemist was a big GTM initiative which the team took last year, and I think they have done a fantastic job. I think in the channel we saw close to 20% growth in whole of last year. So I think that's shaping up very well. We will very much get into the phase 2 of our Project Leap, which is the go-to-market initiative in India in the current fiscal year. And again, Chemist Reach within that is a key, kind of GTM initiative. In terms of e-commerce, we had a great year. Again, in terms of saliency, we are close to around 4%, marginally ahead, of that 4% mark. And it continues to, sort of fire on all cylinders. So that also is going to be a very important channel for us, not just in current times, but also, for many more years to, sort of come ahead.
Last question on direct reach for India. What would be the target next 1-2 years? Any targets you can share with us?
I think it's going to be a mix of both, Abneesh, right? Because as of now, we reach close to around, 1.3 million outlets. It continues to see an increase. Historically, we have seen anywhere between 6 to 8% increase in the direct reach. But trust me, it's also not just direct reach, but increase in the throughput, right? In the outlets in which you sort of reach out. So it's going to be a mix of both. Increase in direct reach as well as how do we increase our throughput in the existing outlets. And that's going to, kind of drive the overall, kind of growth for us.
Sure, thanks. That's very helpful. Thanks.
Thanks, Abneesh.
Thank you. The next question is from the line of Vinay from Sunidhi Securities. Please go ahead.
Yes, thanks for the follow-up. This question is on the recent hire of Sudhir Sitapati. So, Nisaba, you said that in the opening remarks that, the top priority is growth and doubling down on growth. Now, when I look at GCPL as a franchise, we've done extremely well. The execution has been very good over the past 1 year. Second is that on the product innovation front, we've been an industry leader. We have our products also. We have a portfolio which straddles the pricing pyramid. So where do you think Sudhir would really add value, and how, just to get a better understanding on which are the areas where you're looking at him adding more value?
So I think, like I said in the beginning, and thank you for your question, I think what I said in the beginning, say in category management, if we look at our household insecticides, it's 30% of our portfolio. It grew 15% this year, but if I look at the, say, last 5 years growth is below what our aspirations would be for this category, correct? And it's now, we had a very successful launch in Nigeria this year on household insecticides. So when you have these product capabilities, you have this know-how in this category, how do you, really sort of build on that in country after country? So I'm looking for him to bring some of those category management, marketing skills to really sort of build on that. And I know the market has responded very positively. I can't account for how the market responds to these things for news, for something that's not even happened yet. But really, it's not like Sudhir, and, I have a very, very high respect for Sudhir, have had wonderful interactions with him and, got wonderful feedback. And frankly, today, what infused me was much less the sort of market reaction. Worked with him in the past, who know me, who have sent, really strong messages of support. But what GCPL does is not only about Sudhir, correct? It's Sudhir coming in along with the great team we have, along with the strengths we have, and really building on it. So I think he's a very, what I look forward to him is he has very good experience. He's worked on categories, transformed categories. So to use his leadership skills, correct, to use his insights on consumers and, come with our wonderful team and, put us onto this sustainable growth path. That's how I'm thinking about it.
Just one follow-up on this. So are you looking at any changes in the go-to-market or distribution with him also coming in?
So look, see, when someone comes from the outside, they will come with an outside-in sort of perspective, correct? And I think the best leaders, the ones who transform the best, who very clearly understand where are the strengths of the company, what must I not touch, or what must I nurture really well, and where are the things where, I see more efficiency or productivity. And for a consumer products company, go-to-market is our lifeline. So, I'm sure he'll come and study these in the different markets and have value to add in that area also. And also, across the company, as a CEO, you can't be just adding value on category growth. You have to be looking at it from sort of all lenses.
Sure. That's very helpful. Thank you.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Prateek Dantara for closing comments.
I'd like to thank you all for joining the call today. With that, we would like to draw this call to a close. Stay safe, stay well. Thank you.
Thank you so much, everyone. Take care. Bye.
Thank you.
Thank you. On behalf of Kotak Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.